All right, y'all, back to work. Quad witching break is behind us. Hope you guys had a fantastic week last week. I definitely missed you all last week, but now we're back to our desk though. Big week ahead of us, and we just heard about the announcement, that ceasefire between Israel and Iran a few hours ago. Of course, markets love what they hear right now. Nice, big, strong rip going higher this afternoon. Now, this big move higher we're seeing right now is a big clue for me, because anytime we see big moves, there's always two types of strategies, two types of setups we look for the following day. I want to cover both of these strategies because I don't know what tomorrow will bring, but I know we're going to get at least one of these two trades for tomorrow. I want to make sure you guys have a game plan to make some money tomorrow as well. So charts are ready. Enough of the intro. As always, thanks for tuning in and watching my videos. Let's dive right in now and make some money on Tuesday morning. Charts look fantastic right now. S&P SPY ready to go tonight. Nasdaq triple Qs are always ready. I have four very simple but important clues on the charts that are telling us where the money is made tomorrow morning. The first of four clues is right here on the hourly time frame. It's quite easy to see both the S&P and SPY are bullish into a big trading range, and we're rotating off the low of that range. Nasdaq, same thing, bullish into a trading range. And if you know how I trade, we trade these range rotations. So right now, the buyers have all the control of momentum as they try to rotate off the low of these wide triangles, these wide expanding megaphones, as we call these in our trade room. So one of four clues, we're bullish and rotating off the low of this range on the hourly time frame. Second clue is over on the calendar for tomorrow. Tomorrow's not your average Tuesday. We get Jerome Powell testifying tomorrow. He'll be in front of Congress for 2 days, Tuesday and Wednesday. Tomorrow is expected to be the more important testimony tomorrow morning at 10 o'clock Eastern time. We know that Powell just a week ago said he's not in any hurry to cut rates right now, but we're starting to hear from other Fed speakers right now suggesting that a rate cut will be on the table for the month of July. So everyone will be tuning in tomorrow to listen to what he says tomorrow on Capitol Hill. We definitely have that on our radar for tomorrow. We also have the situation between Iran and Israel and the US. That was simmering pretty well today, but now a few hours ago, we heard about that ceasefire between Israel and Iran. And so everyone probably waiting tomorrow to see if that ceasefire will hold over the next 24 hours. So Powell testimony tomorrow. Remember, be careful around that testimony. Whenever Jay Powell speaks, the markets will be listening. And of course, everyone's watching to see if that ceasefire will hold over the next 24 hours. Let's get back to our charts though. The first clue was the higher time frame directional bias. I like to use the hourly time frame as an overall directional filter. And we know right now the buyers have full control. Let's now drill down to some tick charts right now. I got two more important clues here on the tick charts. And by the way, if you're watching for the first time right now, this is a 7,000 tick chart, all the time frames in the upper left-hand corner. And that yellow line right there, that is the only indicator we need to make lots of consistent, repeatable profits. That is the 21 EMA. I mentioned earlier there are four total clues. I got two more clues left here on the tick charts. One really good clue right now is this range and a strong breakout. Anytime we see a big range breakout, we always expect to get a breakout pullback. Now, 29.5 area right now for a nice deep pullback on the S&P. There'll be something similar to that on the Nasdaq. We'll grab that here a bit later on in tonight's video. But the biggest clue right now, though, is definitely going to be that big move higher we've seen really ever since about 1 o'clock this afternoon. We mentioned earlier the ceasefire between Israel and Iran. Anytime I see a big move like this, there's always two types of setups, two types of strategies we look for the following day. The first one is kind of the most common. The second one, though, is by far my favorite. So we'll cover the first one here in the S&P. On the Nasdaq, though, we'll cover my second, what is usually a lot more lucrative. We'll cover that strategy a bit later on the Nasdaq here in this video. So anytime we see a big move like this, one of two strategies is a two-legged pullback. I don't want to buy high, I want to buy low. And whenever I see a big move higher like this, I like to look for basically what's called a two-legged pullback. It is basically a measured move off the high. Imagine a measured move, right? One leg, two leg. My favorites of these go a bit more than a measured move. What I'd love to do is, again, I love the breakout pullback, so we may not get it though. I'd love to find a channel off that high, off that low, and combine a two-legged pullback with the low of that channel. Now to do that, as always, I'm not gonna pick a bottom on this. What I'll do is I'll wait to get that two-legged pullback and then look for a bear trap down here. I'll wait for bears to pull back to that moving average, try once, go higher, try twice. And the goal is to trap those bears in, use their stops to fuel this move now going back up to retest the high. The goal is buy the two-legged pullback, again, ideally off the low of a bull channel. Bear trap, the goal is to go back up and take out that high right there. Now, as we make our way back up to retest the high, we don't just sit back and relax, we look to add to our winners. The easiest way to make more money in trading is to add to your winning trades. And to do that, I always look for this specific pattern. It's a shallow pullback to the moving average. It's a higher high in price. I want to get in right below that low. In our trade room, we call these bear trap into an add-on. And again, the goal is to go back up and take out that high. And again, this is only one of two strategies I'm looking for tomorrow. We'll cover the second strategy, the Nasdaq here, in just a moment. But here's a question though. Sometimes we don't get that bear trap down there. You know, for example, sometimes we'll get a beautiful two-legged pullback, but we can't get the bear's trap down here. It just whoop and runs right back up again. If it bounces hard off of that low, what I'll start doing is really two things. One, I want to get in under prior swings, and two, I want to find a new bull channel and try to buy the low of that bull channel underneath a prior swing. So again, in this scenario, we get that two-legged pullback, but now we don't get that 1-2 back up again. Now we pop right back up and we start grinding, going higher. We call these V bottoms in our trade room. If I see a V bottom, that trade room tomorrow morning, I'm going to shift my focus now to finding that new bull channel off the highs, and I want that first test off the low of that channel. First test is always the best test. And again, the goal is go back up and retest that high. Now, one more variation of this. Every once in a while, we get lucky. We'll get a nice strong run down, two-legged pullback, 1, 2. We'll get that beautiful bear trap once, twice. It'll pop up and then retest that low. This will be a winning trade. We'll take our 1-to-1 target, get that stop up to point of entry. But every once in a while, though, that strong run down is so strong, it'll roll over and retest that low. This is one of my favorite trades in our trade room. We call these retest trades. Before I dive into that though, let's slow down for a couple of seconds because I know most folks watching right now, you guys know these patterns already. You're making money with these already. But if you're tuning in for the first time right now, this might be a brand new strategy for you. Don't you worry though, I teach this entire system, the entire strategy in my free trading course. In fact, I have a ton of examples of bear traps, add-ons. Guys, bottom line is the markets are way too good right now not to be making consistent profits. So if you guys are watching for the first time right now, I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course because the strategy I teach in that short video course will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. You'll laugh when you see how simple that technique is. More importantly though, guys, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, bottom line, if you're still missing the best entries each day, if you've lost your confidence in your current trading strategy, what are you waiting for right now? Pause the video, hit that link that popped up there, and watch that free trading course because everyone loves all the trade examples I include in that short video series. The best part is it's completely free for you. So again, pause the video, grab the link up top there. Also keep in mind too, guys, I'm gonna put all the important links you guys need to learn this strategy, time better entries, make more consistent, repeatable profits. Guys, most folks start making money all on their own, all from that free video course. So again, I'm going to put all the important links. You guys need to learn the strategy. I'll put all those below the video tonight, the description of the YouTube video. Also be aware too, I post a ton of charts and videos and mindset stuff on Twitter, or X as they call it these days. If you're on the X platform, give me a follow. Again, all the details you'll need to learn more, hopefully earn a lot more. I'll put everything below this video tonight in the description of the YouTube video. Perfect. Now you guys know more. If you're watching for the first time right now you know where to go get more information to learn more about this strategy. Now, where did we leave off here? Yes, we talked about the two-legged pullback, right? The bear trap and the back up again. And how every once in a while, we'll see a beautiful bear trap. We'll run it up. But every once in a while, what happens is, though, the underbelly of that first leg down, the move above that high right there, every once in a while, they'll run this thing right back down and retest that low. Again, we call these retest trades in our trade room. It's important to understand anybody who sells on that move higher, where's their profit targets? Back at that low. Sellers up here become buyers down here. This is a horrible spot to be selling. We're an overall bull market. It's a breakout pullback off that prior range. So if we're lucky tomorrow, we'll get 2 bites at this apple. We'll see our bear trap going in, running back up again, run back over, retest that low, and use that retest trade for the exact same entry. It's let the bears try twice, right? Let them try once, try twice. Remember, always a higher high in price, always a higher high. I want those bears trapped in so I can use their stop losses to fuel that move going higher. And again, don't forget, if we get that bear trap working for us, keep your eyes open now on that separation off the moving average, the higher high in price. It's always important to see that separation off that moving average, higher high in price. And that will tell you now you've got the goods now to add to that winner. So retest trade, right? Retest trade. Run that thing back to retest low, trap those bears in, add more to that winner, and back up to retest the high from there. I love retest trades in our trade room. The final thing right now, final variation of this, and then we'll grab the Nasdaq and talk about the scenario for number 2 for tomorrow. The final one right now will be a very shallow pullback. Let's go back to that hourly time frame for a moment. You can easily see we got some key levels up here overhead. We may keep grinding going higher before we take out those highs up overhead. So go back to my tick charts right now. If all we get is a shallow pullback, for example, that range right there, we may only get a breakout pullback off that range. One of the most common things about trading is that range breakouts, they love to break out pullback. What's the problem though? The problem is we're buying relatively high. Again, after a big move up like this, I want to see a nice deep two-legged pullback so I can buy nice and low. I don't want to buy a shallow pullback if I can avoid it in this type of situation. So if all we get is a shallow pullback, for example, off the top of that trading range, I'm going to make a small adjustment on that bear trap. If you're in my free video classes right now, you'll know this pattern already. It's bears once, go higher, bears twice. I want to get underneath a prior swing. So again, I want the two-legged pullback. That's my goal right now. Buy nice and low. But if all we see is a very shallow pullback, one leg, or maybe it's only 1.5 leg, a shallow pullback right now, I need to be very careful. I'm buying too high, and because of this, I'm looking for a very specific variation of a bear trap right there. Same thing, right? One try, two try, higher high in price, but now I want to get below that prior swing. This is what we call a technical bear trap in our free video classes. And the reason we use this in this situation is we don't want to buy too high, and buying below that prior swing right there, that'll ensure now I'm buying as low as I possibly can. Again, targets are always back to retest the high, and again, leave those runners for those levels overhead on the hourly time frame. Now we know there's one strategy I'm watching for tomorrow. It's that two-legged pullback and that retest of that high. I gave you all some variations of that, the V bottom, the retest trade. Now let's go over the Nasdaq right now and talk about that second core trade setup for tomorrow. Over on the Nasdaq, it's very easy to see right now we are bullish into that big old range right there. Ranges love to rotate back and forth, and we're rotating now off of the low of that range. Very easy to see right now, at least from my point of view. We're clearly bullish overall right now on the hourly time frame on the Nasdaq. Now, before I dive into the tick charts and the Nasdaq, if you're enjoying this video tonight, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people these days, and I appreciate you guys tuning in and watching my videos. So as always, thank you guys so much for the likes, subscribes, all the ongoing support. I definitely feel the love in the comment section below. Now, I promise I'm done begging for likes and subs here. Let's dive right in right now and talk about those tick charts here. Very easy to see right now on the Nasdaq. There's that range from earlier today. Again, my favorite trade right now for tomorrow would be a nice deep pullback around that breakout pullback zone by that bear trap and right back up again. Nothing is different there on the Nasdaq. But what if we don't get it? What if we get stuck up here? A second scenario for tomorrow is most of the time, well, shit, most of the time, every once in a while, because the most common situation is after a big move like this, the most common trade is a two-legged pullback, right? Buy nice and low. But every once in a while, though, we don't get that pullback. What if we get trapped and go sideways up top here? What if we don't get a deep pullback? The second scenario, not as common as a two-legged pullback, but I'll tell you right now, if you understand how ranges work, if you understand range rotation, ranges become the most lucrative of these two scenarios for tomorrow. For example, we know that if we see a range up here overnight, we know that range is going to want to rotate back and forth. And we use things like symmetry, below, above. We use things like expanding triangles. We saw earlier there on the hourly time frame, we like to use these megaphones or expanding triangles to trade that rotation back and forth as well. So back to our tick chart right now, if we're lucky enough to see a range up there, now all we do is we look for ways to buy underneath that range. So for example, same thing before. I want to get that breakdown below that range. I want to use that 21 EMA, trap those bears in, bears once, bears twice. Ideally on this one, it'll be somewhere below prior swings or off that prior high. It'll be off some additional level of support below that trading range. We pull back, we trap the bears in. We'll use that same bear trap pattern we mentioned earlier on the S&P, but now think about this. Where does the market now want to go? It doesn't just want to go back to retest the high. It wants to now pendulum swing. It wants to rotate off that low up around that high. That now is where this market now is trying to go. So as we now rotate higher here now, we look at that same separation off the moving average, higher high in price, and in right below that low, right? Again, same thing, that bear trap and that add-on for that rotation going higher here. And remember, this knife cuts both ways. So for example, we might see a range up here. We may go sideways into a range. We may go higher first and then get kicked back off of that high. These can feel a bit tricky, right? Because this will feel very bearish as it rotates off that high. But remember, it's a big move higher. Everyone's waiting for a chance to buy the deep pullback. So mark off the high, mark off of that low. That will tell you now where your pendulum swing is. That's your key level of support now. We wait for that pullback to that moving average. I'm not a big fan of blindly buying this area. I would rather wait for the bears to come in, try once, higher high, try twice, and again, buy right into those stop losses. In the stops, add more, right? Add more on the pullback, keep on adding as it rotates back and forth. And also too, like I mentioned earlier on the S&P, we may not get that bear trap down there. We may end up seeing something like this where it runs off that high. These happen quite a bit, these V bottoms. This could be either going above first, back down again. But again, once we know where the area is, we look for those bear traps, 1, 2, back up again. If we don't get it though, right? If it pops up and starts grinding, going higher like this, I don't want to buy too high. What I'll do is on these V bottom scenarios, I'll mark off that high, I'll mark off that low, and again, always look left, find some prior swings. What I want is I want to get in off the low of that channel. A lot of examples of these, by the way, inside that free trading course I mentioned earlier, but that's our V bottom, right? That kind of V bottom scenario, buying underneath that low. And this could be any of the entry patterns you guys are learning inside the free video course. And again, the amount below that range, the amount above the range. Think about that as your final target going higher here. So 2 scenarios we're ready for tomorrow. One is a 2-legged pullback. 1, 2, again, think about that measured move. Goes a bit too far. Would love to go all the way to the breakout pullback zone, but I will gladly take a channel here as well. Again, channel test, 1, 2, bear trap, back up again. I love that trade for tomorrow. But again, don't be surprised though if we go sideways here into a range. And remember, get under that range, bear trap those bears and squeeze those stops running higher. And remember, be aware of that fake out breakout. We oftentimes go higher first, then come back lower. Again, this will feel very bearish. It's only a pullback after a big move. The key though is wait for that pullback to that moving average 21 EMA. Let those bears get trapped in and squeeze those stops. Trade that rotation back and forth. Guys, those are 2 strategies I'm watching for tomorrow. What do you think, guys? Let me know your thoughts in the comment section below. Hope you guys enjoyed tonight's video. And as always, don't forget tomorrow morning, the place to be is in my trade room, 8 o'clock Eastern time. I can't think of any better way to learn this stuff. Then come out and do it with me. Trade along with us every morning at the opening bell. As always, guys, I'm going to put all the important links you need to learn the roadmap, start making money on your own. Start first on that free video course. All the links below, description of the YouTube video. You're going to love all the trade examples I include in that short video course. Then come join me in the trade room and we'll do it together every morning at the opening bell. In the meantime, guys, as always, thanks so much for watching and tuning in right now. Be well out there. Be nice to each other tomorrow and be here next time. Adios, amigos. Bye for now.